When you see a headline that says, Grayscale files to convert its Zcash Trust into a spot ETF, it's easy to shrug and think, okay, another ETF. But this one is very different. This is the first serious attempt to bring a hardcore privacy coin into the same regulated wrapper that holds blue-chip stocks and Bitcoin. And if it actually gets over the line, it doesn't just change Zcash. It changes the way regulators think about privacy in crypto altogether. And because it's Christmas, we're leveling up the giveaways. The response has been unreal, way beyond what we expected. So here's the deal going forward. If we hit 300 5-star ratings, we'll give another 50 XRP to 2 listeners. Hit 400, we do it again. And if this community somehow pushes us to 500 before Christmas, we'll drop a massive Christmas bonus giveaway to top it all off. All you need to do is rate the show 5 stars and comment "Done," so we can add you to the list. And we're also giving away 10 XRP every Friday for the comment of the week, so get involved. Now, let's unpack what's going on, what Grayscale is actually trying to do here, why they've picked this moment, and what it could mean for investors, regulators, and the broader market if a Zcash ETF becomes reality. First, the basic facts. Grayscale has filed a Form S-3 with the U.S. Securities and Exchange Commission to convert the existing Grayscale Zcash Trust into a spot Zcash exchange-traded fund. This isn't a brand new vehicle from scratch. The trust has been around since 2017. It holds roughly 394,000 coins, and it's worth just under $200 million at current prices. The plan is to list it on NYSE Arca under the ticker ZCSH, with Coinbase Custody as the custodian, Coinbase as prime broker, and BNY Mellon handling transfer agent and admin duties. That structure tells you something important. This is Grayscale trying to put a very TradFi-friendly skin on a very non-TradFi asset. Big brand name exchange, big brand name custodian, big brand name bank. The message they're sending regulators is basically, yes, this is a privacy coin, but the way institutions touch it will look and feel like any other regulated ETF. Before we get too deep into the ETF mechanics, it's worth reminding ourselves what Zcash actually is and why it's controversial. Zcash is a privacy-focused cryptocurrency that uses advanced cryptography to give users the option of fully private transactions. Under the hood, it uses zero-knowledge proofs, specifically Zcash snarks, to let the network verify that a transaction is valid without revealing who sent it, who received it, or how much was sent. On Zcash, you can choose between transparent addresses, which function a bit like Bitcoins and show up openly on-chain, and shielded addresses, where all the key details are encrypted but still provably correct via those Zcash snarks. Economically, Zcash mirrors Bitcoin, fixed supply of 21 million coins, halving schedule, and a focus on sound money-style scarcity. But the killer feature is that optional privacy layer, and only around a fifth of the total supply is currently held in shielded addresses, which is partly why regulators have given Zcash more breathing room than something like Monero, where everything is private by default. So why is Grayscale making this move now? 2 big reasons: price and narrative. On the price side, Zcash has quietly gone absolutely vertical this year. It's up something like 1,000% over the last 12 months, and it's recently reclaimed the $500 level after trading in relative obscurity for a long time. That kind of move always drags in attention, especially from funds looking for differentiated bets in a market where Bitcoin and Ethereum have already seen massive inflows via their own spot ETFs. On the narrative side, there's been a steady drumbeat of developments around Zcash that make it feel a lot less like a dead privacy coin and a lot more like a live, evolving protocol. Galaxy's research team highlighted factors like new wallet experiences such as Zashi that make shielded transactions easier, improvements to protocol efficiency, and a broader revival of interest in zero-knowledge tech both inside and outside Zcash. Then, you've got the NU 6.1 upgrade in late November, which adjusted how block rewards are split and directed funds into long-term sustainability and development. Exactly the kind of thing institutions like to see. We are going to take a quick break here. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Now, put all of that together. The big price move, the clearer roadmap, the renewed zero-knowledge narrative. And you can see why Grayscale thinks there's serious demand for a regulated vehicle that lets institutions express this trade without touching raw ZEC themselves. Now, let's talk about what it actually means in practice for the trust and the ETF. Right now, the Grayscale Zcash Trust is a closed-end product, meaning it holds Zcash, issues a fixed number of shares, and those shares trade over the counter at whatever price the market decides. If sentiment is bad or liquidity is thin, the market price can trade at a huge discount to the underlying ZEC. If demand is frothy, you get a premium. It's clunky, it distorts price discovery, and it's not ideal for institutions that want clean, arbitrageable exposure. Converting to an ETF changes all of that. With a spot ETF, you have authorized participants who can create and redeem shares in line with inflows and outflows. This creation-redemption mechanism keeps the ETF tightly aligned with the spot market. For existing trust holders, conversion usually erases big discounts to NAV. We saw that with the Bitcoin Trust. For ZEC itself, it means large inflows into the ETF translate into real spot buying, and outflows translate into real selling. In a world where it gathers meaningful assets, it becomes a structural demand pipeline for Zcash. But this is exactly where the privacy coin angle becomes explosive. Bitcoin and Ethereum were easy approvals because regulators already understood them. Zcash is different. Privacy coins have been delisted across Europe and Asia because regulators worry about illicit finance, and Zcash is one of the few still standing because it offers optional, not mandatory privacy. Even so, asking the SEC to sign off on a spot ETF holding a privacy asset at scale is a much bigger ask than one more crypto ETF. The Commission could push back, delay, request extra disclosures, or take a hard line if they aren't convinced that a privacy-enabled asset can coexist with US compliance expectations. At the same time, demand is clearly building. Hedge funds, family offices, and professional traders are reportedly increasing ZEC exposure, treating it as a macro bet on zero-knowledge cryptography. And for these players, an ETF solves the biggest headaches: custody risk, operational complexity, regulatory optics. Instead of holding a privacy coin directly, they get the same exposure through a regulated wrapper with daily NAVs, audited holdings, and big institutional service providers. Zooming out, the potential paths are very different. In the bullish scenario, the SEC approves the ETF and ZCSH launches on NICE ARCA. Initial flows might be modest, tens of millions, but the symbolic impact is enormous. It signals that privacy-preserving assets can sit inside mainstream portfolios. That drives attention, narrative, institutional curiosity, and eventually real on-chain demand. In the middling scenario, the ETF is approved but stays niche because institutions remain cautious. In the bearish scenario, the SEC rejects it outright on AML or investor protection grounds, sending a strong message that privacy coins are not welcome in US financial products. There's also a hybrid risk. The ETF gets approved, but future policy changes crack down on privacy tech. That could force exchanges or brokers to adjust their stance, potentially creating turbulence for ZEC holders and ETF investors alike. It's unlikely, but institutional risk committees will absolutely think about it. The real takeaway is this: a Zcash ETF is not just another crypto product. It's a referendum on privacy in the modern digital economy. It's a test of whether zero-knowledge technology is compatible with US regulatory expectations. If approved, it legitimizes privacy-preserving crypto at a level we've never seen. If rejected, it draws a hard boundary around what kinds of cryptographic assets are allowed inside regulated markets. From a market-watching perspective, the key signals to follow are the SEC's comment letters, updates from NYSE Arca, onboarding of authorized participants, and early shifts in on-chain flows. Price action will tell its own story. So far, ZEC's rally back above $500 shows the market is taking this seriously. But sustained strength will depend on how credible investors think the approval path really is. So, to bring it home, the Zcash ETF story sits at the crossroads of three massive themes: institutional crypto adoption, the rise of zero-knowledge cryptography, and the regulatory debate over financial privacy. The trust conversion into ZCSH is only the opening move. The real story is what regulators decide, how markets react, and whether privacy-preserving digital assets are going to be allowed into the heart of the US financial system. Because if Bitcoin ETFs were about getting digital gold onto Wall Street, a Zcash ETF is about deciding whether digital cash with privacy features is allowed at the adults' table at all. And whatever answer the SEC gives won't just affect Zcash, it'll echo across the entire crypto ecosystem. Thank you so much for listening. Make sure you leave us a comment below, and as always, we will see you at the top.